A seasonally weak quarter could prove to be an overhang for Indian IT sector's performance during the January-March period. While demand is likely to see decent growth on the back of digital transformations and the cloud shift, analysts anticipate margins to be under pressure due to supply challenges. Moreover, companies may bake in potential impact on demand from Russia-Ukraine war and elevated inflation in the United States and Europe, which raise concerns about the sector's near to medium-term performance. Ashish Das, research analyst at Sharekhan by BNP Paribas, for instance, expects the sector's revenue to moderate sequentially given the high base of third quarter and weak seasonality.
Increasing IT spends on transformation initiatives across the industries is expected to maintain strong demand momentum in the medium term. During Q4 FY 2022, Wipro and Tech Mahindra are expected to report leading organic constant currency revenue growth of 3.2% quarter-on-quarter and 2.7% quarter-on-quarter respectively. On reported basis, Tech Mahindra is expected to lead among top 5 IT services companies with a constant currency revenue growth of 5.2% on Q1Q in Q4. CC revenue growth of TCS is expected to remain at 2.4% Q1Q, led by higher spending on digital transformation initiatives. We expect EBIT margin of Indian IT to remain flat to negative sequentially, owing to slow revenue growth, higher attrition, rising travel expenses. For TCS, we expect EBIT margin to remain flat as it is well positioned to offset the margin headwinds such as higher costs to backfill attrition. We expect deal TCVs of TCS to remain stable on a sequential basis at around $8 billion in Q4 FY 2022.
On an aggregate basis, analysts are expecting fourth quarter revenue growth rates in the range of 1.5 to 5.3% constant currency quarter on quarter for top tier players and 2.2 to 8% for mid-cap companies. That apart, margin contraction may also extend during this quarter as employee costs have continued to sting. According to ICICI Securities, margins of IT majors could contract on a quarter-on-quarter basis despite the industry continuing to add record number of freshers. The attrition would continue to be high, hence costs to backfill attrition and those related to retention etc. are likely to put pressure on margins. Those at Prabhudas Lilladher meanwhile expect aggregate margins to decline by 40 to 80 basis points quarter on quarter and 150 basis points year on year due to headwinds from aggressive hiring, lateral recruits at higher costs, and rollout of wage hikes. From a long-term perspective, Gaurang Shah, Senior Vice President, Geojit Financial Services, sees the IT sector as a relatively safer bet as it remains insulated from higher crude and commodity prices.
Our sense is that the performance for the fourth quarter and for the quarters to come by, including this financial and many more to come by, it's one of the relatively attractive sectors for long-term investment. The other factor that will work out positive is being a services sector, IT sector like banking and finance and telecom services does not get impacted by higher crude oil prices. So there is some amount of flight to safety investments also that will be attracted towards services related sector like IT. In terms of the numbers, crucial to see what is going to be the constant currency growth and dollar revenue. Along with that, attrition rate is something that is very, very crucial. And of course, the commentary from the management for this financial year as to how the growth is going to be. But overall, we at Geojit remain extremely positive, and in fact, we've been advising investors from a long-term point of view to buy into some of the mid-cap and large-cap IT stocks.
Against this backdrop, TCS, which will announce its results later today, will remain on investor radar. March quarter results of small-cap firms like Birla Tyres, Kesoram Industries, and gaming and hospitality company Delta Corp would also hog the limelight. On the global front, investors will continue to monitor geopolitical developments around the Russia-Ukraine conflict and key commodity prices.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.